Welcome back, tribe soldiers. In this video, I will be revealing to you the ultimate MACD strategy for day trading. Indicators are very good tools for easy and quick trading, and that is, if only they are used correctly. Today, I will be showing you how to use MACD strategy correctly for your everyday trading. And the only way this strategy can work is if you follow all the rules that I will be revealing to you in this video. So make sure you follow everything carefully and also practice them on your charts later so it can stick to your mind. Give this video a thumbs up and subscribe to our channel if you are new to make yourself officially part of the Trading Tribe family. Now let's get to it. The Moving Average Convergence Divergence, also known as MACD, is one of the simplest trading tools used by traders worldwide. 80% of beginner traders have used this indicator in their search for easy trading strategies to scoop money from the market. Actually, MACD is a trend-following indicator that shows the difference between two moving averages. To apply it on your chart, all you have to do is go to Trading View Indicators tab and search MACD, and then choose the first one to appear. It is that simple, and you will have it exactly like this on your trading app or software. And now that we know how to apply it on the charts, the question that pops up is, how does the MACD work? Alright, since you asked, let me show you how it works. As you look deeply at the indicator on this chart, you can see that there are four components to the MACD indicator. First, we have the two moving average lines, which is called the MACD line and the signal line. I know what you are thinking, but hey, they are not the same. The both of them have different roles to play, and here is the difference between the both of them. The MACD line moves more faster than the rest and adjusts more quickly to price changes. The MACD line is the major focus of the MACD indicator. On the other hand, the signal line is the complete opposite of the MACD line. It moves more slower and adjusts slowly to price movement, therefore giving the line a more smoother appearance than the fast-moving MACD line. And here we have the histogram. The histogram is the most visible part of the MACD, and that is what comes to the mind of every trader when they think of the MACD indicator. The histogram boldly represents the difference between the MACD line and the signal line. You could be surprised when you hear that, because you think it is just working on its own. But here is how it really works. When the MACD line crosses above the signal line, it will turn the histogram color to green. And when the MACD line crosses below the signal line, the histogram color changes to red immediately, as you can see here. And the gap between the signal line and MACD line also contributes to the different size of this beautiful histogram. For example, when the two lines are broader apart, the histogram will get bigger in size. And when the two lines are closer or tighter, the histogram will appear in smaller sizes. And here we have the final part of the MACD indicator, called the zero line, which represents the center of the MACD indicator. Now that you have known how it works, let me show you how we use the MACD indicator for trading. Before we continue, meet our sponsor, VMONEY Swifts. VMONEY Swift helps you to exchange your SKRILL, NETELLER and Perfect money to USDT and BTC. Chat them up on WhatsApp using the number on your screen right now. They provide a very fast transaction with a great customer care service. Highly recommended by the trading chief. Okay, let's go back to the video. As indicator traders, the main reason we use the MACD indicator is to find and understand the momentum of a market. And we are able to understand the momentum of the market through MACD. And we find that when we see a crossover between the MACD line and the signal line. Let me show you an example of how we spot this. When the MACD line crosses below the signal line, it indicates that the price is moving in a downward momentum and price will go down the more. And each time the MACD line crosses above the signal line, it means that the price is moving in an upward momentum and price is expected to go up the more. Remember, the MACD line is the blue line and the signal line is the orange color line. Now, we can also determine the momentum of the market by using the sizes of the MACD histogram. If the MACD line crosses above the signal line and the histogram keeps getting larger, It shows us that the momentum of the market is growing stronger, And if the histogram keeps declining or getting smaller, it indicates that the market momentum is getting weaker. Very simple. Now that we have known that, let's move on. Now you may ask, trading chief, but they are two moving average line on the MACD indicator, which is the signal line, and the MACD line. Why then do you use the MACD indicator instead of just adding moving average lines to the chart? Now, here is the difference. So here I have my MACD, which the MACD line and signal line are set at the default settings, 12 and 26 exponential moving average respectively. And here I have my normal double exponential moving average, which is also set at 12 and 26 exponential moving average. Now, watch carefully. So if you look at these two indicators, you can see there is a connection between the both of them. So each time there is a crossover on the normal moving averages, we also have a crossover on the MACD. And that is when the MACD line crosses over the MACD 0 line. That is a good one from the both indicators. Kudos to them. But hey, we are not here to trade any 0 line. We will give zero attention to the 0 line. What we are looking to trade is the crossover between the MACD line and the signal line. And as you can see on the chart here, the crossover on the MACD indicator gave an earlier crossover for a trade entry when compared to this distant crossover on the normal moving average lines. And that is why I love the MACD indicator, actually my favorite indicator for finding momentum. By the time you would have entered a trade here, the market has already left you behind, and your stop loss would be used to buy coffee for a hedge fund traders. Now this is the moment of truth and decision. Don't allow anything distract you as you fully concentrate on this video. I am about to show you the strategies you can use to trade the MACD indicator. Before I continue, I would like you to hit the like button and subscribe to this channel now if you are new here, and also share this video to any trader or traders that you want to also become a more profitable trader. Now, if you want to trade a MACD indicator with ease, do this. Now, one of the biggest mistakes that traders make is trying to trade the MACD indicator solely on its own, which is very wrong. And here is why. So in this trade, we are clearly in a downtrend, but down here we can still see the MACD line crossing over the signal line. And that is actually the MACD indicator telling you to buy the trade, which would have been a losing trade for you. And to solve this problem, I found the first solution in order for us to stay afloat and work with the trend, which is our friend. We need something that will give us a clear proof of where the trend is going to. And for that, we are going to employ a moving average line. No, it's not the first one I talked about earlier in this video. This time, we are going to be adding the 100 exponential moving average to our chart. This indicator not only shows us the current trend of the market, but it will also guide us through the long-term trend. And that is what the MACD indicator alone cannot give us, because it is more focused on the short-term market momentum. While using the 100 EMA together, we want to make sure that we are taking buying trades when price is moving above the line, and we are only looking to sell the market when the price is moving below the line. It is as simple as that. Do not complicate it. And we already know for the MACD that we will be using the line crossover. So now, what happens after the crossover? In order to use these two indicators together, we are going to be following this following set of rules before taking a trade. Number 1, we must wait for price to touch the moving average line. Number 2, we must wait for a crossover of the MACD line and the signal line. And finally, number 3, we will take the trade upon the next bullish or bearish candle that appeared after the MACD crossover, depending on the trend. We use number 1 to get on the trend and have a trend retracement for more effective trading. We use number 2 to confirm the trend and the momentum of the market. And number 3 will be our entry candle after the crossover. Now let's see an example of these 3 rules used together. So here we have a market approaching the 100 EMA line, and if you look down, you can see that the MACD indicator lines have not crossed yet. That means we may have a chance here, and there is probability of having a good trade. And then, the price finally touched the 100 EMA, fulfilling the first rule. But if you look down, the MACD lines have not crossed yet. They are waiting for more momentum in the market. And here finally, the MACD lines have crossed. Very good. Now the second rule has also been obeyed. And we are waiting for the last one to enter the trade, which is the easiest part to spot. And as you look well on the chart, you can see that after the MACD lines have crossed, there was a bullish candle following it. That bullish candle is our entry candle. When you see a setup like this, that followed our rule to the last, the next step is to enter our trade boldly like a champ that we are, without any doubt, but only clear expectations. We will place our risk management plan like this. We place our stop loss a little pips below the last low of price on the 100 EMA line, and our take profit target at the next high. And here you see the results of the trade. Look, our take profit target got hitted successfully. A very beautiful trade. Imagine you took this one. Your personal trading account could have grown a lot more bigger. Okay, now, let's see another example where I applied these same rules for a trade. Now this is where it gets interesting. After the take profit target was hitted on our last trade, we saw the market approaching the 100 EMA. And because we are not immune to profits, we are going to take the trade. And this is how we did it. So based on our first rule, we must wait for the market to touch the 100 EMA. And as you can see here, the market has touched our 100 EMA line. And that is the market fulfilling our first rule. And next we must find a crossover on the MACD indicator lines in order to take the next step. And here our indicator lines, the MACD line and the signal line have finally made a crossover. Our second rule have been fulfilled. And here we are now waiting for the last rule, which is a new bullish candle after the crossover. And here we have a bullish candle after the crossover, which now signals to us that it is time to take the trade, fulfilling our last rule. And after that, we take our trade and apply our risk management. So here, we will be placing our stop loss below the last move on the 100 EMA and our take profit target at the next high. Now, see the results. Our take profit target was hitted successfully. And this is how your trades will keep hitting take profits if you follow all the rules that I have shown you in this video. This is one of the easiest and very profitable strategy I have ever used while trading with indicators. I would like you all to go and practice them on your demo account and then maybe to your real account when you are satisfied with the results, as I will be waiting for your testimonies on Telegram. And a word of caution, this strategy works on all individual time frames. Do not use the time frames to analyze it, else it will fail. Swing traders should use it on the 4 hours time frame. Day traders should use it on either the 1 hour time frames or on the 15 minutes time frame. And finally, for scalpers, I do not recommend this strategy for scalping, as there will be too much information on the smaller time frames, like the 5 minutes and 1 minute time frame. We are going to be using this strategy to make very solid block profits. But if you are currently trading with a very small account and you want to grow the account fast by scalping the market, I made a video of a minor moving average strategy you can use to scalp the market to grow your small accounts fast. Make sure to also follow the instructions in this video if you want the strategy to also work for you. My name is the Trading Chief, and it's a wrap for this video. See you in the next one.